What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to our market recap video for February 3rd, 2022. We're only a few short days into February. We're still at the very beginnings of the trading month. What a crazy day. Before we jump into today's price action, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, let's dive into the action today. S&P 500, as measured by the SPY, finished down 2.35%. Nasdaq QQQ was down 4.05%. Apparently, this was the biggest down day for the Nasdaq since I believe it wasn't the coronavirus crash. It was at some point in 2020. So yeah, really sharp downward move. IWM small caps were down 1.89%. Dow Jones was down 1.42%. And the ARK Innovation ETF was down 5.61. Volatility was up in all of these indices, and we basically had washout breadth under 20% across all of the indices. So why did we get such a huge bout of volatility? Really, the primary source of all the damage in the indices was the Facebook earnings, and you can see this on our heat map. Take a look. Where the heck is Facebook? Okay, it's right here. It doesn't have the number on it, but Facebook ended up closing down over 26% on their earnings report. And this sort of thing, it can happen when the market's pretty fragile and, the risk sentiment is kind of negative to begin with. And then you get a big company that misses earnings and all of a sudden everyone pulls away. And when that company is one of the biggest companies in the S&P 500 and the Nasdaq, that's where a panic can really break out. And that's exactly what happened today. So this was, I want to call it, it's almost like a mini tail event where this one big company in the tech sector, everybody was kind of flying high and a lot of the hedges had come off, and now all of a sudden we had this anomalous earnings report that no one was really expecting. So look at this huge gap down for Facebook, and throughout the day really heavy selling on high volume, and we closed towards the lows of the day. One thing that I noticed was that when I was looking at the order flow, it looked like Facebook was being accumulated. So I actually day traded Facebook a little bit, and I actually took a swing position home with me. But yeah, Facebook was really the primary problem today. All right, let's take a look at the rest of our heat map. And you can see the weakness really just emanated from that. We had Netflix down over 5%, Google down, Microsoft, Apple, Tesla, all of these names down. What I did notice today, though, was there were a bunch of divergences. So I noticed some companies that were really bucking the trend of the market up until the very end of the day when everything, just kind of gave out. So some of those companies I noticed that were doing pretty well. AMD, which I currently have on, this name at one point today was, very positive. It was up 1.7%, trying to get above this 20-day moving average, but then the overall weakness of the market really just took it down. Ended up closing, though, with just a doji candle. So overall, things are still shaping up for AMD. We'll have to see if it can get above that 20-day moving average. Another name I noticed that was showing some really nice relative strength within this tech group was Apple. So look at Apple. Basically had a vertical move over a few short days after reporting good earnings. And this consolidation, I really like this tight action here. And for the most part, Apple was struggling between being flat, being a little bit down on the session. At one point it was positive, but again, the overall market weakness really took this down. So what makes this so crazy is heading into the session, let's just jump over to the S&P 500. Heading into the session, I had a very clear plan. It was crystal clear, and I felt, very calm in executing it. My plan was just, hey, I've been in this sequence so many times before. If the S&P 500 can't hold the 20-day moving average, I'm going to close out some of my risk. Until then, there's not really much to do. On days when you're sort of straddling that 20-day moving average, you'll notice there's a lot of jostling above it and below it. So really, you can't make your decisions as a swing trader until the end of the day when you have that river card and you can see how the day's price action shook out. With that being said, I started to see weird divergences. I was like, hey, so Facebook's already down 26%. I looked at the earnings, it's not like they're losing money. They were positive. They were still growing, albeit slower than they would like to. I'm like, this thing got sparked for 26%. That's most of the decline in the S&P 500. I was like, hey, if Facebook's not down another 26% and Amazon reports good earnings, we could find ourselves in a whipsaw situation where we close on the lows today and then we just gap up tomorrow and, suck in all those short covers once again. So it made things a little bit more difficult on the close because it was like, if I close out all my risk here, if Amazon has a good move, then, I'll regret doing that. So I made a compromise. I just closed out some of the weakest things in my portfolio. And I actually added some SPY calls into the close. Those ended up working out very well because we all know what happened in the after hours. Everyone was super afraid about the Amazon earnings. It was like, Amazon, it's going to crash the market. I tweeted about it a couple times just because I thought it was pretty funny. So, listen to this. So, Netflix reported earnings, I believe it was on the 20th. And the market had a huge negative reaction to Netflix because Netflix did the same thing as Facebook. It was down about 25% after reporting earnings. So all these stocks, horrible reactions. Everyone got super scared going into Apple earnings. And Apple ended up having a great earnings report, put in this green candle, which really bottomed out the market. And even though we just had that situation, about a week ago, Facebook reports poor earnings, everyone freaks out about Amazon. And sure enough, Amazon reports their numbers. And Amazon is trading up in the after hours. So you can see Amazon lost 7.81% just in fear of the earnings report. And then you can see in the after hours, did give back a lot of these gains, but it's up at 31.40. So that's a very good move to the upside considering, everyone was thinking it was going to crash. So yeah, everything ended up resolving properly. In terms of these S&P 500 futures, check this out. In the after hours market, we went up 1.19% just off of that Amazon print. And now we find ourselves again, tomorrow we're going to come into the session and we could actually end up remounting this 20-day moving average for all we know. Now, I would imagine with all the put buyers that came in and, went crazy buying puts, there was a lot of that today. We could have another short covering rally. So although we did close below the 20-day, I think the Amazon earnings, the fact that it's pretty much a binary event, could help the market tomorrow. So it's tough to just only look at the technical picture when you have these catalysts. Take a look at this. These are the after hours movers. Snapchat reported earnings. It's up over 50% in the after hours. Bill.com up almost 30. Pinterest up 17. Unity up 14. And Amazon up 13 and change. So some very nice moves in the after hours market that players are going to have to react to tomorrow. And I know for a fact there's a lot of players, that they got pretty bearish today on, this big tail event due to Facebook. So there's a lot of nuance within today's action. But overall, I'm optimistic heading into tomorrow, and I'm really, excited to see what the river brings. So the S&P 500, one thing I also want to point out on the hourly chart, take a look at this. We were so extended away from this weekly value area that, I don't want to say we were due for a pullback, but a pullback is completely within the norm. And then look at this big 1 hour candle here after the Amazon earnings erased a lot of these declines. Let's take a look at these other indices. The Nasdaq really got hit. Oh, and then one other thing, I also want to just show you the weekly chart. I think given where we are in the markets right now, these weekly charts are just super important. So the other day we tried to reclaim this 20-week moving average, and we could not. So I'm actually going to set an alert at that 20-week moving average again. We'll have to see how the market reacts there if and when we get back up to that level again. Let's take a look at the Nasdaq. This chart looks a lot more impaired. You can see it's not even back up to that 20-week moving average. But we'll have to see what happens tomorrow, after the Amazon print. And maybe, who knows, maybe some dip buyers come into Facebook. We don't really know. So that's the weekly chart for the Nasdaq. Let's go over the daily. And look at this. What if this was, we made a low, we made a high, what happens if this ends up being a higher low? You know, we could end up advancing a little bit more up until the February OPEX, because the VIX is so big, guys, and within these OPEX cycles, time is a very important component. So right now we have about 2 weeks until OPEX, right? Let's take a look. OPEX is the 18th. Yup, so we have tomorrow, which is Friday, and we have one whole other week. Basically, the situation is there's been so much put buying over the past couple weeks, given the volatility in the market. And with those puts, there are Vana flows. The Vana flows basically just means that as the volatility comes out of the market, those puts are going to be decaying. And as those puts decay, dealers have to buy back deltas. So you get a nice tailwind for about the next week of price action, just due to where we are in the OPEX cycle and those dealer dynamics. So for me, I don't want to be like fading any strength or anything like that until we really get through next week's price action. All right, so that is the VIX. Went through that. Let's take a look at the Russell real quick. Russell's up a little bit after hours as well. And the Russell definitely looks a bit weaker. And then the Dow Jones, our dogs of the Dow, they are up 0.49% after hours. And yeah, look at this. The Dow Jones is still kind of riding that 20-day moving average. So I'll have to see what happens. Those are our headline indices. Let's take a look under the hood. So it's kind of weird. Like everything from 9:30 to 4 was super bearish. And then everything in the after hours market was pretty bullish. So it's kind of tough to like, you know, set the tone for this video, because, you know, a lot of what we're seeing on these visuals, you know, could be partly undone. Like for instance, the social media ETF, that thing got killed today, but with Snapchat up 55% after hours and Twitter up and Pinterest up, like this isn't even really like valid information you want to be going off of anymore. Let's just see. So today the only sector that ended up finishing positive was the consumer staples, up 0.03%, and then everything else got killed until the Amazon earnings. Top momentum sectors are energy, European financials, and China tech. Style factors, the quality style factor got smoked, and I'm guessing that Facebook is in this quality ETF. Momentum also got smoked, high beta, growth, all of these got the smoke. And then seasonality. So along with what I was saying regarding OPEX and those positive Vana flows hitting the market, that really lines up well with this seasonality. Once we get closer to OPEX, that's where I really want to, you know, get more defensive. I remember last year I had a rough February. Let's put it that way. The tail end was very tough. I don't want to have another tough tail end of February. All right, let's check out. Some of these names that I saw that were bucking the market trend. Now I'm going to do some scans tonight and share what I'm finding with Pristine Capital members of just like, here's some of the stocks that could be in play tomorrow, given that, you know, the market environment just seems like it should be a lot more friendly tomorrow. CF, I already have this position on. I have it on in size. I took a 20% target on my position, but I really like the way this one is consolidating after its big run a few days ago. Looks really good. AMD we already talked about. Apple looks very good. It's up about $1 in the after hours session. And we have this monthly value area high right above us. I'm going to set an alert there. So that is that. What else did we see? AMD we already talked about. Oh, take a look at this. Raytheon. Look at this thing. So Raytheon is over here, and this thing was breaking out today while the market was so weak. So a lot of these defense stocks, you know, they're actually setting up pretty nicely also. We're above this monthly value area. So yeah, Raytheon, take a look at the weekly chart. We're getting close, getting close. Yeah, we're breaking out on this weekly time frame as well. So Raytheon is looking pretty good. All right, let's take a look at some of my trades for today. And in terms of my trading, my plan was, okay, let me do a little bit of scalping, because I'm going to get my river card into the close in terms of if I'm going to keep my exposure on or not keep my exposure on. take a look at this. So I did do some day trading in the morning. I day traded some SPY for a nice little winner, which is pretty good. Kind of just keeps you going. I day traded Facebook as well, and I got a really quick, pretty good winner. I made $1.50 here in Facebook. Then I traded Apple. That was when the market started to get a little bit weak. Lost about 65 cents in Apple, which is okay. And then I put on Facebook calls. And I said this was for a scalp, but I was seeing some crazy dynamics when I was looking at this Facebook order flow. And I was like, I gotta stay in this thing. So Facebook, we already went over this one very briefly, but closed at 237.76. I kept on my position. In the after hours, it's trading up to 240, and change. So Facebook, I just saw it looked like there was accumulation going on from a lot of these weak hands. So could this thing get a bounce? I certainly think it could. So I kept that on. And then what else did we have here? Then into the close, I just said, you know what? I am going to close out some of my exposure. So I knew that the Amazon event, I was like, I just feel like everyone's hedging against Amazon. And, I just think we're just going to get the opposite response where it's going to fly higher. But my trend model's telling me, hey, close out some exposure. So I sort of compromised. And I was like, let me take out some of the dead weight from my portfolio. So I closed out these ARK common shares. And these, I got into this exposure by selling some put options. And I must say this ARK ETF, in the after hours it's trading up, which is great. But other than for a little bounce trade, I just don't think ARK is going to be like one of the top performers for the year. So I was like, let me just cut that if I'm going to cut anything. And then what else did I cut? I cut some DigitalOcean. This was one of my best names from last year. And I still think this name has so much potential. But in terms of just taking some risk off, I was like, let me just take off, what's really not in the best trend and, that sort of thing. So I took off those, both of them for losses, which is okay. All right, let's take a look here. And what else did I do? Oh, yes. And then I got long. Check this out. So I got long the SPY February 7th, 446 calls. So I did take off a little bit of risk, took off some dead weight. And I was like, Amazon just looks like this thing could rip people's faces off in the after hours. So I bought these calls. And as of right now, they're marking very nicely in the after hours because we got that bump. So yeah, if you take a look at SPY, it closed out at 446.60. In the after hours, it's all the way up at 451. So I'm looking forward to tomorrow just to see if we can get some follow through. If we could get back above the 20-day, that would be insane. That would really help my calls out. So yeah, I'm super pumped that I got that on. Super pumped that I kept Facebook on. And then I did take a stab at KRE today. KRE looked awesome at one point, but I think the overall market weakness just kind of got it. I would definitely take a shot at this tomorrow as well. Yeah, KRE at one point during the day was pushing out above this little cheap pivot. And so I took a stab at it. Maybe this one I shouldn't have done. But yeah, I took it off for a little paper cut. So that's the beauty of, I've been trade journaling almost every single day. So I can see a lot of, weak areas in my trading game, where I get things wrong. And it really helped me for navigating today, where it was like, hey, I've been in these sequences before and I know where I typically mess up in these sequences. So I just tried to avoid a lot of that and it ended up working out pretty well. All right, so those are my trades for today. Let's take a look at our options order flow real quick. We'll do our big tech options race. Oh wow, Facebook had the most flow today. That was another thing. I noticed that a lot of call buyers were coming in when this was on the lows. Because I think a lot of investors, they got so blindsided by these Facebook earnings that now they're forced to sell it down 26%, even though they probably wouldn't like to be in an ideal world. Amazon, a lot of flow for Amazon, Facebook, Tesla, SPY. Very rare that Tesla's not in our top slot. So let's take a look here. And I noticed, I was like, geez, everyone is buying puts on Amazon. Like, look at this. So SPX, Mixture of puts and calls, more puts though. SPXW, ton of put activity. So imagine this, like everyone that bought all these puts, look at this for Facebook. Jeez. Everyone that bought all these puts, they're going to be walking into a gap up tomorrow. They're going to be like, geez, do I close these out or do I keep them on or do I add to them? Big VIX put going up. Tesla, some big old calls over here. The February 18th 900s, the March 18th 920s. And Amazon. Wow, so this looked a lot different earlier. Maybe these came in like after hours or something after the report. But earlier today when I looked, it was pretty much all put activity. So maybe in the after hours, some people scoop these up. And then what else do we got? PayPal. This one, yeah, PayPal is another one very similar to Netflix or Facebook that had a rough go post the earnings print. And this one has been in a downtrend for quite a while. This one very oversold, but we just don't know where it's going to go. For all we know, Facebook could pull a PayPal tomorrow and have a down candle. Well, I would imagine this one will probably bounce the rest of the growth and the tech. All right, and let's take a look at one more here. So we have, let's take a look at this Citibank. A lot of calls for Citibank. So yeah, I noticed the regional banks, they were really trying to move higher. What about XLF? Yeah, XLF, same thing. Not the worst pattern there. And Citibank specifically, yeah, Citibank specifically doesn't look all that great. But that about does it for this market recap video. This one ended up being a little bit longer. I'll try to keep it to a minimum tomorrow. Hope you all have an awesome rest of your night. And I'll catch you all in Discord tomorrow.